How's your internal finance and accounting support function working for you? I've got 5 tips to improve things that won't break the bank. Hi, my name is Susan and I share financial tips for founders and CEOs, especially around scaling your business. In today's video, I'm going to take a look at your internal accounting team, your accounting or finance function, and give you some tips for improvement. Over the last 20 years, I've worked with a lot of businesses and I've seen a number of common issues over and over again. And so what I'm going to do here is I'm going to run down 5 common issues and then I'm going to give you the 5 tips or recommendations to address those. Okay, so here we go. The 5 common problems or opportunities, as I like to call them, that I commonly see are: number 1, old antiquated accounting software. Such a wasted opportunity. Just imagine if you were working from a flip phone today. Number 2, business owners are not regularly reviewing their financial performance. Incremental improvements are the byproducts of periodic reviews. Number 3, not having a financial plan in place. No plan, no budget. Really? How is that working for you? Number 4, no clue why your accounting function or your bookkeepers are always running behind. Have you ever asked why? And number 5, always worried about cash. Okay, here are the tips. Number 1, move to cloud-based accounting software for so many reasons. You will improve the efficiency and effectiveness of your team if you migrate to leading-edge accounting software. Cloud-based accounting is where all the innovation's happening. Not all systems are created equal, mind you, so make sure you have the right one for your business. For most small to mid-sized companies, QBO is great. And no, this video is not sponsored by them. Also beware of those pitching ERP systems because you may not need it unless you have complex inventory or you have multiple corporate entities and you need to consolidate it and you're finding too much time spent there. Otherwise, you're probably fine in QBO. If you have any questions about that, feel free to ask and I'm happy to give some tips on that. Number 2, review your basic financial reports on a monthly basis. If your company's growing, it's really important that you sit down and review your finances every month. A good package includes an income statement, a balance sheet, a statement of cash flow, and aging receivables and payables. A better package would have comparatives, so compare your income statement to prior periods so you see if you're trending up or down. And the best package would also include a cash flow forecast, forward-looking, as well as a budget to actual variance report, which leads me to my 3rd tip: put a plan on paper or on Excel. If you don't have a financial plan, you are unlikely to perform exceedingly well. Anyone who's driven to seed knows that you need to have a plan. The process of putting a plan in place will help generate a lot of good conversation in your financial review meeting too. And once you've got a budget formally approved, your accounting department can load it into QBO and then you can run a variance report efficiently on a monthly basis basically and see how you're staying on track. How else are you going to know if you're on plan or not if you're not actually measuring and tracking on a monthly basis? Okay, number 4, if you find your accounting department's always running behind, your bookkeeping is late, it's probably because there's not an established cadence there. Make sure you understand what the cadence and the rhythm is in your accounting department because it works on a rhythmic cycle. You'll have bi-weekly payroll, do bill processes and expense processes in the off weeks. Establish a cadence for invoicing. The department will function best if you honor and stick to the cadence. So once you've established that cadence, respect it and don't interrupt the flow. Number 5 is the final tip and it's all around cash, so it's super important. Make sure you keep at least 1 month of operating expenses available in cash on hand. Now, conventional wisdom says you need 3 to 6 months, but most entrepreneurs seem to have a really strong risk tolerance, and so that's rarely the case. So let's just make sure that you at least have 1 month of cash so you're not always worried about bouncing checks or missing payroll. It gets completely dysfunctional if you're always asking your bookkeeping team to take a look at bank recs and predict cash on a daily or weekly basis. It's wasting a lot of time. So if you're have an opportunity to secure a loan, but you're not doing it because you feel like interest rates are too high, the reality is you're wasting a lot of that money paying for support that could be better well served. So if you think about the cadence of bank recs and credit cards being done monthly, if people are having to do those processes on a daily, weekly basis, you're just spending a lot of excess administrative time. So it will far exceed the interest expense of the bank loan. So just keep that in mind, and also you'll avoid the chaos and kind of dysfunction that comes from having to check cash that more frequently. Now you'll notice I haven't touched on dashboards and KPIs, and that's because most small to mid-sized companies don't have the internal expertise to handle that. So at Number Crunch, our outsourced financial solution covers all your day-to-day internal accounting and finance needs. Plus we have financial advisory services that allow you to affordably access expertise that's generally only available to bigger companies. So reach out if you want to chat about that. I hope you found the 5 tips helpful today. Please hit a like or share if you feel inclined, or comment if you have any suggestions for future videos. Thank you so much.